Okay, this is Brent from Trade Guild. So we're looking at AstraZeneca, another drug manufacturer that is probably going to suffer a little bit from the Democratic win, as there's going to be health reforms. If we take a look at the blue moving average, you see this is just a moving average of price over the last 200 days, so the average price over the last 200 days. You can see that AstraZeneca over the last few years has tracked off that 200-day moving average very well. You can see support over here, support over here, support over here. Ultimately, we break down below that. We see a change of character, and then we see resistance, resistance, resistance over here, resistance over here. So this 200 bar moving average, which has started to flatten out, which is kind of an improvement over this downtrend we've seen for the last year and a half, is an important indicator to be watching. Let's zoom in a little bit closer and take a look at what happened on Tuesday. And what we see is a nice breakout on Tuesday above that blue 200 bar moving average. Subsequently, we've seen a failure. One of the things that we look for in a breakout is nice volume, nice high volume. We didn't get that here. That means even though price moved up higher, basically because the whole market moved up higher, the buyers weren't there. There weren't a lot of buyers. They weren't aggressive, and it's not a good sign. As we see price falling over here, we see volume picking up on these two red bars. That's even worse. So our first zone of resistance, if price ever tries to rally again, is going to be this blue 200 bar moving average, as we've seen in the past recently. One of the things that I always mention about breakouts is when a breakout fails, and this is a breakout over here, they typically reverse very quickly and they move to the downside fairly fast. So this is not looking really good. As a matter of fact, if we take a look and let's just see what the change has been over the last 3 days from Tuesday to now, we've lost almost 10% in the last 2 days. And you may recall my crossover system that I talked about in the last video. I want to see this short yellow moving average cross above the blue, which we got. And remember, I told you there's a lot of false breakouts, a lot of false crossovers. So I apply a couple other things. I want to see this yellow one cross above the blue, which didn't happen, and I want to see this guy above 0. That did happen. So we had 2 out of 3, but for me this is not a very good signal. I don't know if I would have bought on this signal. Here's that volume weighted average price. We saw price move above that. Now that it's below it, it means the majority of people who bought in the last 30 days are now at a loss. People who are at a loss tend to sell, and as they sell, they put more supply on the market and prices tend to fall. Looking at the same chart, but if we look at a 15-minute version of this chart, and you can see here's the 4th, Tuesday. You can see that we did get the crossover. The yellow crossed below the blue. Price crossed below that VWAP. You can see it tried to make it back up there and it failed. What that tells us is, people who owned around this average price of $43.50, when price made it back up there, they said, I'm getting out of this sucker and not having a loss. You can see some selling there with this big volume. So my conditions, remember, were 1 crossover here, 2 crossover here, and in this case we have to be below 0, which happened. So this for me is a legitimate short sale, a good signal, and as of now you can see that we're still under all the moving averages and under the VWAP. I don't know what's going on here. We got some nice green volume. We'll have to take a look at that. Maybe we're going to get a little bit of a reversal here in AstraZeneca. Now I want to show you this heat map, and on this heat map we want to be selling short when it's below the 0 line over here like it is, and when it's blue and green, this is the safe time to sell short. So in this area up here around 43.40, and over here where it's yellow we want to hold. Ultimately, when we see this red and we start to see it move up like this, we want to start to liquidate that position. Of course, by the time it crosses over 0, we want to be out of that position completely. So over the last 2 days, you could have bought somewhere around 43.40 and sold around 40.24. It's nearly 10%. Not a bad move for a couple days there in AstraZeneca. Now, if we take a look at our Bollinger Bands again, and we're going to take a look at a daily version of those. You can see this is just all over the place, a lot of volatility. Investors don't like volatility. You can see how wide these bands are. One thing you'll notice is a tendency of price to move between the bottom of one band, say over here, to the top of the other. Over here at the blue, at the top of that band, moves down to the bottom, and over here we're at the bottom of the band, and we've moved to the top. So an obvious price target is possibly down here around 36. And finally, we're just going to take a look at my 3C indicators. Let's start with a 60-minute over here, and you can see over here on our Tuesday, over here, I've mentioned in the past few videos, we want to see this indicator move up with price for a healthy uptrend. And what this is showing us is a trend that's not so healthy. The indicator's moving down, indicating distribution, which means sellers. A lot of times traders will sell into strength. If there's demand, there's buyers, these guys who've bought down here, they're going to sell into that strength. They're going to use that strength because of the demand, they get higher prices. If there wasn't demand, they wouldn't be able to get those higher prices. So we're seeing that occur in that 60-minute version of that indicator. If we take a look at the 30-minute version of the indicator, and let me back out a little bit, you can see really just how bad this really was. First of all, let me show you a positive divergence. We have pretty much equal lows here. The indicator starts to move up in this area, and instead of following price up, it heads down over here. So again, this whole area is distribution, is sellers, and when we see signals like this is why I say this is a leading indicator, or it's close to a leading indicator, which is quite rare for indicators. We want to be a seller. Now we see the lowest lows being made, which indicates probably on this half-hour term that we're going to see lower prices. Remember what I said, nothing goes straight up, nothing goes straight down. Here's a 1-minute version of this chart, and this is a positive divergence. So what this means is as we see price come down, making lower lows, this indicator is moving up. It's actually at a leading positive divergence, which means we'll probably see a bounce in price, meaning price moving higher. You're probably thinking, well, you just said price is moving lower. We're talking about two different time frames. If we look at a well, let's take a look at a 60-minute time frame. On a 60-minute time frame, price ultimately is moving lower, but we were just looking at a 1-minute time frame, and that means we might see a little bounce like that 1-minute time frame showing a positive divergence, and then after that we can see a move back down. So nothing moves straight up, nothing moves straight down. And that's why we look at multiple time frames. Notice the nice volume here, the nice green volume on the uptrend, and this was the area of distribution that we saw in the 3C indicator. And look what's happening with the volume here. There's just no demand. Then this red volume is showing us sellers. And I just want to make the point again that we're seeing this positive divergence. We're seeing a leading positive divergence on a 1-minute time frame, which means we may see price rise maybe today into the close. We don't have too much time left. Maybe tomorrow or Monday, but it looks like we're going to get a little bit of a bounce, and then AstraZeneca can of course start moving back down. One last version of this indicator real quick, and this is going to be a 5-minute, and this is pretty insightful, I think, because it shows price having moved up, and here's Tuesday, election Tuesday, and look at the indicator moving down, distribution. The reason I'm showing you 3 different versions is because these are all formulated different. They're all saying the same thing, so it gives us more confidence in the signal. And again, as price moves down over here, we would expect in a healthy downtrend for this indicator to move down, but instead it's moving up. And on a 5-minute version of this chart, there's a possibility for what we would call a bounce. Maybe it hits 42 from $40, so there's a possibility to make a little bit of money there. But ultimately, I think AstraZeneca, like a lot of the other drug companies, is going to be heading down. So that's it for today for the drug makers. I think I'm going to cover one more sector, and I'm going to wrap it up for today. So this is Brant from TradeGuild.net.